we've been in since we marked the bottom of it in the end of March, and we capped it also right away in the very beginning of April. And since then, we've stayed inside this, making holding the support and holding the lows, highs, and keeping this index at bay. So this is what probably has led to the consolidation that's forming in our major currencies, even though the dollar is still strong versus most currencies, with the fundamental coronavirus still being in play. So with that, let's go and check out our first signal of the day, and the week actually. This was triggered back on Friday, and we have what is called a 3 inside up buy pattern. So this is right here. This low right here marks the first day of the pattern. This set the low on these following 2 days. This touched off our buy signal on Friday as of the close. So that would be why we put on our Forex trade. So as you can see, back on the 5th, or on the 7th rather, of May 7th of 2020, we executed these trades. We are long from 106.56 average price. Right now, we have a stop in that is protective already, because we've had such a nice little follow through move over Sunday into Monday that, well, why wouldn't we? So here we have that going on. We have a target price of 107.624, so it's up there a little bit yet, so we have a little ways to go. At least that's where it's trading at right now, and we still have a little idea of where it's going to go, and we'll get to that as we get into that market. Now let's also look at our binary options trade, and this is key, so let's give you an idea of what kind of a target level we're looking for. We had purchased a binary option that's earlier today at which is the US dollar Japanese yen greater than 107.75, so that's the strike price. It has 4 days left till expiration, which would be on May 15th, and it expires at 2 o'clock Chicago time. We paid an average price of 30.5. We are long, as you can see, +1. Current market is at 41.50. So right now this market is up. You can see that the index value is at 107.63. So without further ado, you can see, yes, here the market is rallying higher. So the question is, how far are we looking for a move right now? So right now, actually, we are going to do a quick little easy calculation for a little way to find our target range. So we have right here, and we have right here. So we have the 50% and the point levels for the Fibonacci move that had been this lower move high into this higher move low. Now remember, this market had made a higher move high back here before all this volatility started. Then the U.S. dollar tanked against the yen all the way in the beginning of March, spiking with really, really harshly down here, and then rebounded almost like it wanted to come and blast through new highs. And we had a target of 112.5 to 113.5 to be around this time of year. Actually, we were looking for to grind higher, as it was in February, bobbling here at just around 112. We were thinking that it would be like this kind of a trade, like it was in the last quarter of last year, just consolidating and grinding higher. Well, we obviously had the coronavirus, which has caused all kinds of volatility. Now, while the dollar index is consolidated and some of the other crosses have consolidated, this one has been riding support and slowly just grinding lower. But last week, we got our buy signal, and now we have our upside target of 108.82 to 109.5. Now, remember, we have that binary options to trade on, so that is at 107.75. So let's correct this right here. Let's make this a little bit easier. Let's get into the settings. Okay, here we go. Coordinates. So 107.75. That is the strike price for our binary option. Let's make this a little bit thicker for you so you can see. Okay, so right now we are trading right below our strike price, which is our target level for our binary option. Now, that means that we want the market to close above 107.75 or just get above 107.75 so we can sell this out at a profit. Now, obviously, we could sell this option out right now. The market hasn't quite gotten there. We have 4 days of time left, and we can just take the money and run. However, we're going to follow our trade. There's no reason to give up this little gap here. This is where we make our money. So if we just take out right now for the risk reward that we had on, yeah, that wouldn't be such a bad day trade. But this is not a day trade that we put on. This is a signal that is meant to go into until it goes up into this target band. So 108.82. So in fact, what we're going to do is we're going to show you right here for our target price, and we're going to make this 108.82. Okay, so see, here's how we do this on the MT4 platform. and this is now entered into the market. So now we have our target price. So see how we found that? We used some Fibonacci just to do a simple target. Now, is this how we do it all the time? Absolutely not. What you'd have to do is read that book, High Probable Japanese Candlestick Patterns, and you can see how we do it in our main account. But for our short signal account, this is where it's at. This gives you a good trade. Now you have our target zone. You know that we are along the US dollar yen. Remember, this is for illustrative and educational purposes only. Do not try and chase this trade. We are already in this trade, so no, the reward to risk ratio is no longer there, so do not try and copy these, but follow them and see how they manifest. And then if you like to learn how to execute these, like I said, you can either read the book or become one of our Signal subscribers, and you'll have them executed for you. So anyhow, with that being said, let's see what's going on with the other majors. So we already know that the dollar index is looking to kind of break out. It's wedging. And let's see why. So we know we have dollar strength showing in the Japanese yen where it has not been for quite some time. Well, look at here. We have the euro US dollar. Well, we have dollar strength here as well. Not so much. You can see these ranges have really tightened up. And this market is wedging as well. So let's look at this one here. So let's grab our main trend line here. And we can just go from this high down to here. We can see that this market is slowly making its way into this wedging formation. Let's pull this out a little bit longer. Okay, so now here we go. All right, so here's where we're at. We're waiting for a breakout. We don't have a signal. Remember, we have a trading signal that we have in the US dollar yen. We do not have one in the euro US dollar. Irony of it all, that market had been slowly decaying, just a really creepy little bear just grinding through support. And it was tough to be try and buy into that market. Obviously, it was definitely the wrong side for for a week and a half, 2 weeks, where it just continued to make newer move lows, but just barely. And then even on the short side, how much room did you have? Like you really had to hold on to it like a week and a half ago and finally get out in reverse basically sometime between now and then. Well, hopefully when that signal was generated. Anyhow, so we have the euro US dollar. We are waiting for a breakout. Now we have a lot of issues going on in the EU because Germany put a deadline for the EU last week to the ECB about what they want to do as far as quantitative easing and interest rates, and as far as holding up and propping up the market by buying stocks and bonds and things, or bunds, excuse me, for them. So that being said, I think you're going to see the euro stay in a consolidation pattern for the next week and a half as it makes its decision on whether it's going to bend to Germany or not. Should they say we're going to do what we're going to do, well, that's going to be a big problem because Germany has an issue with inflation and interest rates. This goes back to what caused World War II, and there was a time of hyperinflation that they have vowed to never allow to have happen again. So, and even at the expense of the EU, it's not going to happen in Germany. So I think that we have a potential political tug of war that's about to break out there. In England, the ECB did nothing last week, and we have a potential head and shoulders formation here. This is another nice little pattern here, but is it going sideways? I don't know. It could be just consolidating and hanging here. So this right now technically is taking out the neckline, especially if we settle below it today, in which case then, does it confirm a head and shoulders? Well, not really, not until it takes out really this low here. If it takes out 121.66, all bets are off on the consolidation as it starts to lower, not just the consolidation, but it resumes its bearish trend. Remember, this market's in a bear market. It has rallied back as a correction and now has been sideways, but overall, lower move highs, lower move lows. Now it made a lower move high, it made a higher move low, and then a lower move high again. So this just spells bearish to neutral. There's no bull here right now. Not unless we get a rally that would take out the head, which is this point right here. So above 126.59, then we could see us getting bearish, or bullish rather. Otherwise, this is also like the dollar index. We could stay consolidated, but I don't know. I'm more right now leaning to see if we can take out support here, especially because we do have a head and shoulders pattern here. Playing the short side, at least you know your risk is up here to $1.26.59. And a failure from this level to $1.22 will most likely have this market targeting somewhere around 120 to 118, literally in this area here. So even if it grinds through support, it has a potential to still bring this market back to an area like that. But otherwise, if it doesn't, then we're going to really see if this market really stays consolidated and the euro stays consolidated. Well, then we really might have an issue with the dollar index helping us with as far as setting a trend with most currencies, because we had a good months where the dollar strength was definitely helping to be a guide for us, especially with the coronavirus trend. But now that we're coming off of that, currencies are starting to come free and clear, or are they? I think they may also be consolidating, waiting to see what happens with the broader markets. And then remember, we have interest rates that are next to zero all around the world. This is an interest rate. Interest rates are a component of currency pricing, just like currency pricing is a component of interest rate of bond prices. So this is something that they are correlated and interrelated as well. So now we have one variable that's frozen. The currency still can move around, but the debt markets really can't. And the fact that we have our major currencies that are consolidating like we are, that's basically saying that we're waiting for a move. We're waiting for a move, either an interest rate valuation move or something to really shake up the currencies. Otherwise, the currencies for the major currencies, not all of them, we're going to get to those, but for the most part, you can start to expect to possibly see a lot of range-bound markets for the next few months. This maybe 3 months, all the way up even through the rest of this year, where we may hold a range of somewhere between this. I mean, it wouldn't be out of the realm of possibility for this high that was set up here and this low that was set right here to contain the Swiss franc for the next month and a half. Does it seem likely? I don't know, but could it go like this and maybe go up there and then come back down here and whatever and be like right here at the end of summer? It very well could be. I mean, obviously anything can happen. The market can go up, it can go down, whatever. But as far as the way we're looking with the dollar index, if the European Union and these countries, as they come back online, if they stabilize, but there's no real momentum one way or another, I mean, this could be like a shell shock, like what happened with September 11th. For those of you that are older traders and more experienced and have been around for a while, you remember that after the initial wave of volatility that happened when everything opened up after September 11th with the markets and stuff, we had a lot of erratic movements. And then we went flatline basically for almost 2.5, 3 years. There was nothing going anywhere because people weren't traveling. I mean, they were traveling definitely more than they're doing now, but it took a while for things to really kick back and for people's confidence to kick back. So even if there's no strife going on in the world, we may be very range bound for quite some time. So this is something to be keying off of, and just range traders on any given day, maybe having a really good go of it over the next few months, selling into highs and buying into lows and not expecting any major swings. But for those of you that are not range traders, you have to wait for signals. You have to wait to buy into really key support or sell into key resistance or play the other ways. We're going to have a lot of options trades that are going to be developing over the next few months, I would assume. Definitely, we already have the binary options that we're playing. We also have futures credit spreads that we're starting to look at now as far as just getting this. Reason we don't have them on is we couldn't get the pricing right. Had the pricing been better, we would have credit spreads above and below the market already in a couple of these different currencies right now, especially the majors, because we're looking for them to be contained. Why not? If these stay where they're at, even if they break out, one spread's going to win, and it'll cover off most of the loss. If you have such a severe spike in volatility, it would cause your credit spread for you to have a higher loss on the second spread. Otherwise, if the market's contained, then you're making money on both spreads, which is that's something you usually don't do. So we actually might be ripe for those of you who are range traders or not range traders to look at futures options on some spreads, and we'll be getting into that as this situation develops. We're just waiting to see how some more volatility, depending on some of the majors, where they're at, if they can maintain their consolidation. And we also have some central banks that we're waiting to see if they do what the Bank of England did, which was stay pat. So you got the BOJ and the BOE that seem to be right now not doing what the U.S. Fed is and what the ECB wants to do in a couple other banks. So with that being said, let's go back to that region over in the world by Japan, and let's see what's going on with the Australian dollar, U.S. dollar. Now, this one has been a bull versus the dollar since the spike when all the markets got hit back in March. Look at this. Isn't it crazy that we can get rid of that? Let's get this. Sorry about this, folks. Let me get my pointer here to get the sizing here. So here we have the middle of March where this market had been a bear market, just tanked. I mean, it had major volatility, and now it has been just a bull, boom, 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 higher move highs, higher move lows, higher move highs, higher move lows. Is it consolidating? Well, that's a good question. So far, this market and the overall trend now is pretty much neutral because it has been trending higher now for 2 months. It's hard to not say that this is a bull because it is. It's been making higher move highs and higher move lows. Just very different than a lot of the other currencies where they started to consolidate. This one has maintained its trend. However, because those other ones are flattening out, maybe this is the time when we start to see this happen here. Is it ready? I don't know. We could be. One thing you can see here from our trend lines is that we can look for this, which we're eventually, even by attrition, going to either ride up or come through. Does that make it bearish? Not necessarily. I mean, the main trend line that was broken, and the key one is this one here. We came out of this. We broke out of this wedge, but now we're going to consolidate. That's probably where we're looking to see. I mean, markets don't. This is a tremendous bounce that we've had here for the Australian dollar, US dollar, considering that while this maintained its upside, originally this was an upside correction while the other ones were doing the same, this one continued, the others consolidated. So either the Australian dollar was so overdone or the fact that China is coming back online is that good for Australia. Now the question is will global trade resume and will those numbers be sustained? Maybe also because of the way oil had gone as well. And now the oil is stabilizing, this may be giving strength. Now here's something that I want to look at is that the New Zealand dollar was trading in tandem with the Australian dollar versus the dollar for quite some time, up until recently. So while the Australian dollar has been showing a lot of strength, well, look at this one. This one has been more sideways. So the other ones seem to bounce much better, and you can see that they're very similar in charts. But look at this. This one didn't break out. So the question is, do we have divergence going on? Is the New Zealand dollar, US dollar going to be a market that goes sideways? Or is it set up for a correction back to the downside where the overall bear market will resume itself and this upside correction, which has become a consolidation, will wane? Well, this too has made higher move highs and higher move lows, but as you can see, it's much, 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 much flatter of a slope. This being said, I think you have to really start to see that we're coming out of this phase where we had so many markets in tandem, riding the wave together. Now they're looking to break out. We're starting to get some moves. So we're going to look at another market right now, the US dollar Mexican peso, and see what's going on here. So as we head into these lesser currency crosses, we can see whether there's dollar strength or dollar weakness. Here we go, consolidation, consolidation, consolidation. So this market here, we're looking for a signal. There's a potential head and shoulders or actually just a going nowhere pattern. That's probably going to be the case. The US dollar Canada, this is one that we were thinking was going to, this was one of the first to consolidate, and then it held support, and then it looked like it wanted to give up again, but no. It doesn't really seem bearish. So dollar strength seems to be here, but not necessarily that it's overzealous either. So I think this is another indication that we have to wait for a signal, and then we'll see what happens. Because right now, we have made a series of lower move highs and lower move lows, but now we started the balance, and now we may be making a higher move low being neutral. So it's hard to get a gauge on that one. Once again, let's wait for a signal. This is why we only have 2 trades on right now. Well, actually, it's one market, 2 trades. Now we have the US dollar, Turkish lira. Now look at this. Even this one's lower today. This one was where the dollar is not gaining strength. It spiked 2 days ago. After peaking, this is when I'd be very careful trying to pick a top or think that this is going to be ready for a big break. It may very well be. Very wide spreads, a lot going on. But I don't think dollar weakness is really the case right now. But as we get the dollar to consolidate, we may start to see a little bit of a correction here. But remember, as long as the curve isn't bending for the coronavirus, I'd be very leery of selling into this, and I'd be looking for another buying opportunity. So with that being said, let's go back to our one trade as we end this webinar for today and see where we're at with the US dollar, Japanese yen. Remember, we were right at our, well, there we are. We're right here at our strike, right below our strike price, looking for it to get a little bit higher. Hopefully it will. So remember, we have this right here, this pattern where you this red bar here, set the low, and then we have these 2 positive days after that. It's called a 3 inside up buy pattern. And that is also something that we talked about in the beginning. It's a high probable Japanese candlestick pattern. You can read all about how to trade this signal in this book. Read it either in Kindle or paperback version and check it out. And also check out our videos as we follow up these signals and see how they manifest either winners or losers over the course of the week. So subscribe to our YouTube channel, Forex Trading Unlocked, and always check us out at our website. You can find us on our market analysis page when we're streaming live, or like I said, subscribe to us and also get our email, and then you'll know when our videos come out. So with that being said, I want to thank you very much. Forex-trading-unlocked.com, your key to online trading. Come and check us out every day for your Forex trading needs,